G'day folks, welcome back to Pete's Investing. It's March the 6th, 2024. This is the gold technical analysis. So we've got a bullish trend on all time frames. Just be careful, we've also got a divergence on all time frames as well. And I'll talk about that on the charts. First off with some basic news on fueled by expectations of central bank rate cuts in the US and Europe this year. Gold prices surged to new highs on Tuesday, with the precious metal benefiting from safe haven status during economic uncertainties. However, the rally might be tempered by a stronger than expected US jobs report on Friday, and some investors are shifting their focus to Bitcoin, which has seen significant inflows into related ETFs. So what we have here is the weekly, the daily and the hourly charts. And what I've got down at the bottom here is the ADX 25, and you can see there they're bullish on all time frames. On the CCI 150, which is our divergence indicator, they're all, the weekly and the daily are broken to the upside, which is long positioning. However, just be careful, we've got a bearish divergence on all time frames. You can see there the CCI is low, the highs of the CCI are lower than the previous highs, whereas on the charts, on the price chart, the highs are increasing or expanding. So on all time frames, we've got a divergence, which means we could see a potential decline, and the CCI is already declining on the hourly. So we may see a decline on the hourly in the short term. Now in terms of, let me just blow up the daily, get a bigger picture. So in terms of looking out for next levels, I like to sort of draw Fibonacci retracements from recent lows. So let's go to this one first, up until that high. So one thing to look out for is you've got to make sure it stays above the 61% level from this range. If it drops below there, the next level of support will be this dotted line, which is 1984. Currently the resistance up there is at 2146. So that's our initial key area. This is 61%. Then the support at that level. Now if it drops, I won't get too much into the detail, but if it drops much lower than that, then you can see there that's going to be our next support level at where that equal bottom there is. So in terms of a trading idea, the key thing to note is we'd like to make sure ideally the weekly and the daily are both in a bullish mode, and that's, as you can see here, in alignment with the ADX, but also the CCI 150 is above these multiple moving average bands on both the weekly and the daily. So it's safe to go long in that scenario. Now you've got to also consider the divergence when doing that. At the moment the hourly is on a downslide, so you can see there's possibly a slight decline on the CCI on the daily as well. But having said that, if I go to the trading idea, this is the daily chart, and these are both the 1 hour charts. This one's the average down approach, and this one's the stop loss approach. So ideally, when the weekly and the daily and the weekly and the daily are aligned, then you can start going long when the daily breaks above the moving average band, like it did there. And I've drawn, and what I've done there is I've drawn this back test, which shows you that's where you would have started going long on the average down approach, and in this case you wouldn't have averaged down. And on the approach here, you've generated $39, and on a stop loss approach you'd be in the negative because of the stop loss principle. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules, so you can pause the video and read that in your own leisure, and the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button, hit that notification bell, and we'll see you in a future video.